If you run or work inside an accounting firm, I want to start with something direct. AI is already inside your firm, even if you haven't approved it, even if you haven't written a policy, even if you haven't discussed it, it's already there. Staff are using it to draft emails, summarize legislation, structure memos, clarify tax rules. And here's the uncomfortable truth. Most firms using AI today are doing it without governance. And governance, not accuracy, is the real risk. This session is not about how to use AI. It's about something more important: how AI quietly changes professional risk inside regulated firms. AI feels efficient. Drafting becomes faster. Research feels quicker. Explanations sound polished, but efficiency creates a dangerous illusion because speed compresses review time. When review time compresses, verification weakens. And when verification weakens, exposure increases. The problem is not that AI produces wildly incorrect answers. The problem is that AI produces confident answers. Confident language reduces skepticism. And skepticism is one of the foundations of professional judgment. The risk isn't obvious mistakes. The risk is subtle overconfidence. And subtle overconfidence passes review more easily than obvious errors. That is where governance must step in. There are 3 silent failures I see in accounting firms integrating AI informally. 1. Documentation failure. AI drafts influence reasoning, but nothing in the file shows that influence. No traceability, no record, no reconstruction path. If you cannot reconstruct how a conclusion was reached, defensibility weakens. Documentation standards cannot disappear because AI made drafting easier. 2. Verification weakening. Staff begin to trust structure and tone. Research summaries are accepted without full source confirmation. Legislative references are assumed correct. Numerical explanations are not recalculated. Over time, verification becomes lighter. That is governance drift. 3. Responsibility. Diffusion AI becomes part of the reasoning process, but no one defines who is responsible for verifying what. Junior staff rely on AI drafts. Managers assume review occurred. Partners assume controls exist. Assumption replaces structure. An assumption is not governance. Let me ask you 3 questions. Does your firm have a written AI policy? Does every AI influence file include documentation? Is there a defined verification standard for AI outputs? If the answer to even one of those is no, then your firm has a governance gap. The issue is not whether AI should be used. It will be used. The issue is whether its use is controlled. Most firms do not have defined permitted versus prohibited use categories, documentation requirements. Escalation triggers secondary review thresholds. Data classification standards. Without those, integration becomes informal, and informal systems create unmanaged exposure. Now, here is the opportunity. Firms that govern AI properly will have a competitive advantage, not because they automate more, but because they integrate without compromising standards. Clients will trust them more. Regulators will respect them more. Internal workflows will remain defensible. Governed integration creates stability. Unmanaged integration creates vulnerability. The firms that win will not be the fastest adopters. They will be the most disciplined implementers. Modernization without governance is not progress. It is risk acceleration. Before we close, I want you to reflect honestly. Are staff using AI right now without written guidance? Would you be comfortable explaining your AI oversight structure to a regulator? If a client asked how AI influences their file, could you describe your verification process clearly? If the answer feels uncertain, that is your signal, not to panic, but to formalize. This is not about stopping AI. It's about installing structure around it. If you want to understand whether your firm currently has exposure, I've created a free AI governance checklist. It's designed specifically for accounting professionals. It will show you where your firm stands in terms of policy documentation, verification, escalation, confidentiality, oversight. Download it below. If, after reviewing the checklist, you realize you need a full structured framework, I've also written a detailed authority guide that walks through controlled implementation inside accounting firms. And for those who want a complete operational training program, the full Level 2 advanced course is available as well. But start with the checklist. Clarity comes before implementation, and governance comes before scale. AI is not the risk. Unsupervised integration is. Thank you for being professionals who care about standards.